the lower time frame, the next lower time frame. If you started from the daily time frame, you will now go to 4 hours because you want to break down your market overview into structure. Remember, we are trading structure. We are trading a system. We are trading within a zone. So once you do market overview, the next thing is breaking down into structure. So we now go to, okay, so we are starting from daily time frame. The next thing is to go to 4 hours. So we go to 4 hours chart. Can we share the link? So we go to lower time frame. So you go to lower time frame for structures. Thank you, Lord. Go to lower time frame structure. Yes, sir. So you go to 4 hours. Please let me open the chart and go to 4 hours. No. Come here, sir. Yes. So you go to 4 hours. Now on 4 hours, I want to begin to mark my key zones. To mark key zones. These markers are finishing on time. Is it because we left it open? But I'm very cautious. I don't leave it open. To mark key zones. So if you look at where price is bouncing from, you will see that that place is actually a key zone. This is a key zone here. And price it has bounced from that place. This is another key zone here. This is another key zone here. Do we get it? Key zone. Key zone. Key zone. Yes, because if you look at the market very well, you see that's the area where price reacted from. This just happened today, not quite long. But if you look at here, price went up, came to this area before it went up. And look at what he did. He came that place. He did liquidity sweep. Then it's above that area. The next one is this area. You see? Then the next one is also this area. At least 3 is okay on 4 hours. Those are key areas. And what it means is that if this price, because if this price return to this key zone, buy again. So now that, let's say you are just coming to the market now, and price has passed that area, what you are looking for is for price to, if you are trading from the 4 hours, you are waiting for price to come and retest this area before you buy. However, if you go to a smaller time frame, probably it has retested it. In between this, you know, this one candlestick takes 4 hours to form. Yes, and that's about 1 hour. That's 30 minutes. That's 16 candlestick of 15 minutes. So it's likely that it must have done it. So you go to lower time frame. That's why if you are a day trader, the lower time frame is where you will execute from. Yes, if you are going to be a day trader, execute from lower time frame. So let's go back to the charts. You know, you can't trade from 4 hours. You are still analyzing the market. Welcome, sir. We are still analyzing the market. So the next thing is to go to 1 hour. I've already mentioned it. That's what we are doing right now. If you are just coming in, you are either a scalper or a day trader. Execution is from lower time frame, either 15 or 5 minutes. It's not just for beginner, for everyone who is a day trader, who is a scalper. Because let me tell you the reason. The reason is because if you are trading from a higher time frame as a day trader, you will have missed the perfect entry, or trade will have gone. You will have missed trade, and then you are joining halfway. While you are still waiting for more confirmation on a higher time frame, on a lower time frame, it has formed that structure, it's already moving. I was making that mistake 2 years ago. I was only sticking to 1 hour. For example, let's say I want to buy gold now. This is where I will just be buying from, because I will be waiting for this candlestick to fully form. Meanwhile, some people have caught the move from here, because from 5 minutes, they will have seen reasons to enter. And then this is where the RSI works. Even though it's a lagging indicator, but it's already telling you I am oversold. Look at, it's below 30. It's around that place. Anything here means oversold. Anything here means overbought. Do we get it now? So now, if you look at the the 1 hour time frame, if I'm still going to mark anything, I want to mark areas of resistance. So which means I am going to mark here. Don't worry, I'll come and mark it myself. I will mark here and I will mark here. So that means this price that is going, I am expecting it to get to that level, and then we know what to do next. And if it breaks that level, it is there is the next junction. No, don't worry, don't worry. Good one. Go sit down. So why am I marking these areas? If you look at previously, remember, technical analysis, always look to your left. What has just happened? What recently happened? You don't need to go too far. As a day trader, don't go too far. Just look at what just happened. So now, look at here. You will see price rejecting, forming some rejection here. Then this is another area of resistance. Price got here and collapsed from here. Price from here also rejected and then collapsed. So I am anticipating that this move will get, if I'm going to sell, it will also be rejecting. It won't break it. Time to try the sell. So you will see those small candlestick, bearish candlestick, red with wick. This is that area of rejection. It's not crossing it. Then it forms a very good candlestick. Then you place your stop loss here. You place your entry here. Then we'll get there. So once we start moving lower, then we'll understand. Baba, where are you going now? So give me the chart. Give me the chart. So are we following now? Yes. So now this is 1 hour. You are still using 1 hour to see, to mark structure, to understand your key areas. Now is not the time to sell because of this RSI as well. It's at oversold. Even if I'm going to sell, let's say I'm beginning to think of selling, it has to come to this area, not where it is right now. In fact, if it falls from where it is right now back to this area, I want to try buying again. Yes, this area. So you buy or sell in the zones. Don't trade in this unknown, no man's land. That's why marking of those key zones are very important. Those who are trading 1 hour, they might likely pick their buy from here because of this green candlestick. Because that green candlestick has overshadowed the previous red candlestick. They call this candlestick pattern Marubozu. Give me that my. What he's saying is that it's just like sunshine. It's just like this guy here, red candlestick here, needs sunshine to power it. As long as nothing is overshadowing it, he has the strength to still go down. But now, something now covered it completely as a shadow. He loses his strength. Marubozu. You see it here. It neutralizes this one. The implication is that it will buy, and it's resting on a zone. Remember, we talked about confluence. Confluence is combining 2 or 3 indicators, signs, signals. So you are not just buying because of this overshadowing candlestick, but because it is also bouncing from a key zone. You might be shocked that this buy now can return back up. Even if it doesn't complete it today, it may not. This might be the return of that gold buy, because that crash that happened yesterday was sudden. And that is the highest crash we have ever seen in the history of gold. Highest that we have ever seen. We calculated it now. 6,000 pips move. Yesterday, today also 5,000 pips move already. That correction is too much. So the probability that, now this is where traders always get their information from before they execute. The probability that it will start going higher is high. To start going up is high because of the information that is set up. Now, let me also introduce moving average. We will be surprised that we might likely see a moving average here. Let's introduce moving average. Samuel. Jimoso. I didn't know. I'm just thinking. This place now, a further confirmation for traders to trade. This moving average 200, is serving as support. Key level, price bounced, 1. Moving average, 2. It took out the previous strong sell candlestick, 3. RSI oversold, 4. So people are already placing bet on buy. Because they have so many reasons to enter the trade. So now, the chances that it will now buy from here is higher than the chances that it will fail. These are, let me show us again. What are the chances that it's already in a place where it will start buying? Number 1, general trend says gold is bullish. Number 2, it has just done a correction. Number 3, it just bounced up from a key zone support. That's number 3, right? Number 4, it just bounced from moving average 200. SMA, simple moving average 200. 4. 5, RSI says it's at oversold. Then 6, candlestick pattern. Now, as against it selling from there. Baba, you are distracted. I have 6 reasons why I'm buying from here. As against why should it sell further? If I'm going to sell further, maybe just 2 reasons. Number 1, it is just entering into a sell trend compared to the massive long trend. Go back to the chart now. That's number 1. Number 2, if it's going to sell further, is that you need to come back to this zone, which is not there yet. You just did a lower low, and you can't sell from lower low. Are we getting it now? Then another reason, third reason, that price is not below all the moving average. To make the sell stronger, it broke 20, it broke 50, broke 100, but it couldn't break 200. So if I look at the two together, I have enough reason to buy. Even if it will sell later, even if, not if it will sell later, I'm not thinking it will start selling from here. And it's not safer to start selling from here. If you are going to sell, let it get here or here. Those who are trading one hour now, they will just be entering. But those who are trading from 5 minutes, 15 minutes, they will have entered. They will have entered since. In fact, their trade will have done 800 pips. After it hits this key zone with some smaller candlestick structure, they will have entered. That's why I said a day trader will need a smaller time frame to execute, so that you don't miss a bigger part of the move. You are in good profits. You are sitting down on good profits. Unlike somebody who is executing from 1 hour. That was the mistake I was making earlier. I don't leave this 1 hour time frame. I'll be waiting for confirmation here. Meanwhile, people have really moved. And most of the time, by the time I'm entering, it's doing some retracement. My stop loss too will be wide. Because my stop loss needs to be below here. Until price break below this green candlestick now. That is when it will invalidate this buy. This buy now will be invalidated when price breaks this green candlestick. If not, even if it does a minor correction around this area, as long as it's still sitting, there are so many factors holding gold now, right now, that I can't sell further. The 200, the key zone, this candlestick, it's an elephant bar. But can it still fail? Yes. Yes. But not likely. So this, when you see this kind of setup, 7 out of 10, it will work. 8 out of 10, it will work, which is a good pass. The issue is that psychologically we are not able to take loss. That's why when it fails once, you would think that the setup doesn't work. That you have done something wrong. You have not done anything wrong. It is just part of the system. What happened yesterday is nothing technical. It was 100% fundamental. It was panic and fear of the news. The investors started taking profits. And because the profits was huge, it collapsed the market. And we wouldn't have access to information at that time. We were victims.
So the phone had given me off sync. So this morning I just woke up. I just check. On the pastor said it's not good. Let me check. So that all the money
although that one, Excellence also manipulated it. Because my own money, I still have my own money. The loss was huge. But I think because they were the one controlling that fund, all the people who are copying the trade, they are the one controlling their funds. The fund is not going to a liquidity provider, so they could manipulate it. That one is another topic for another day. I'm going for a meeting with them tomorrow. I'm going to mention it. If they want customers to still trust them, they should not manipulate people's money. Because there's no way we can defend it anyway. They are the one who knows what they are doing. So this is how setup is being made. Let's go to a lower time frame. Go to 30 minutes. Look at 30 minutes. Anyone trading 30 minutes will have entered here. Once you see this kind of structure where price broke that key zone and then went back, is what they call liquidity sweep. Liquidity sweep, or liquidity grab. What it means is that some people will actually put pending order here. Pending order, they will have put buy limit here and put stop loss somewhere here. So liquidity is a manipulation to go and stop them out and then return back, meaning that their analysis was right, but they manipulated them out of the market so that they won't participate. Then they use their money as liquidity. Do you understand that explanation? Those guys who were here, that means they went to set a pending order. It is a buy limit. That means they were waiting for price to come here to buy. So the moment price got there, it was supposed to start buying, but it went down below that level to stop them out, because they will have placed stop loss here. Also, some people will have placed sell stop below that level, that if it breaks, it will sell further. So it stopped the buyers out, it stopped the sellers out, then start buying. So when you see this thing, it's a very good indicator to go the other side. So 30 minutes will have entered here. 30 minutes will have been profit ahead of the one who entered in 1 hour. And look at, when we're marking those key areas, in 1 hour, the one I marked here wasn't looking clear. But now look at it. Very clear. And can you now see what I'm saying now? On 30 minutes, it's looking like a sell structure, because all the price is below all the moving average. We are already entering into noise area. We are already entering into noise area where the market is no longer, is already saying the direct opposite. Daily is already telling us is now to buy. 4 hours is already telling us prepare for buy. 1 hour is saying buy. 30 minutes is still saying no, don't buy, because the price is below the moving average. But those who understand this structure, they will have picked their buy. Anyway, I know that out of 5 trade, 3 will give me profit. So I will buy anyway. That's how trade is. That's why I said, never be afraid. Once you have done your analysis and you have enough reason to go. Go. You need 4 trades to win out of 10. So enter. If it comes back here, people will still try again until it breaks here. But the market is really, really, really volatile. Really, really, very highly volatile. Highly volatile right now. So let's go to 15 minutes. There you're going home. Okay. Look at 15 minutes too. 15 minutes is saying sell. It's saying sell. Look at the downtrend. It's saying sell. So those who are looking at market from 15 minutes, this might be where they will be selling from. Okay. Lower high, lower low, lower high, lower low. Now they might be seeing their lower high from here. That's why when you are buying, somebody else is selling, because everybody is seeing the market differently. Everybody's seeing the market differently. So if you are going to be executing your trade, this is where you come to. So you will have bought somewhere here, and you will have taken good profit from here. Even if you are opting out from here, it's decent. Let's say you are using the moving average as resistance. So your TP is here. So why 1 hour is just entering and now he's struggling? The market has not given him profits. You that entered in 15 minutes, you have entered here. Your stop loss is here. You have made like 2.5% or 3% here. So why the market is doing this slowing down thing is doing now, you've already take some profits and then you lock this one. Meanwhile, if you retest here, we'll take it again. So that's how we do it. You start by doing market overview. And for a day trader, you start from daily or 4 hours. Then you start going to lower time frame to mark your key zones. And these are the key zones we have marked. This one, this one, this one, this one, and this one. This is enough for you to trade today. And once you are done, you can delete all for the day, so that tomorrow you are having a fresh overview of the market. Once you do 2, 3, it's okay. So let's say you just enter the market right now. Why price is here? What all you need to do is, after we have marked all of this, what you are waiting for, what you are doing is to wait. Wait for a retest, you buy. Wait for market to come here, you can try sell. Back here. Wait for price to come here. First one, wait for a retest here and buy up. Second one, wait for price to get here and sell. If it fails, then buy to this point. Then if it gets here, sell. If it gets here, don't sell back here, sell up to this place. Because already you've made profit before. So this time around, you have made something, you have nothing to lose. Make it longer. Then if it breaks here, then buy higher. So at every key zone, you are waiting for a rejection or a breakout. At every key zone, you are waiting for a rejection or a breakout. rejection or a breakout. At every key zone, you are waiting for a rejection or a breakout. At every key zone, you are waiting for a rejection or a breakout. Now, this is how that breakout, how you can attack a breakout. Key zone, rejection. These are the two likely things that will happen. Rejection, then breakout. Now, for the rejection, look at, let's say this is your key zone. Let's say this is your key zone. Is the camera here? Let's say this is your key zone. And price is coming. When price gets here, the first thing is, if it's not coming with full force, it will slow down here. Even if when it is coming with full force, it will slow down there. Now, two things will either happen. Either break or either reject or break out. These are the likely scenario. Now, this is how to approach it. Yes. You mark your key zones. Yes. Is what you are going to do. That will determine what you are going to do. So, and I said there are two things that will happen in this zone. Yes, a rejection or a breakout will happen at this key zone. Now, if it's going to be a rejection, see what is going to happen. If it's going to be a rejection, see what is going to happen. Price will get here and then it will reject. This is the wick. This is the body. Or it does something like this. It's like we have green marker. Yes. Green come first. Or it does something like this. This or this. Do we understand what I just put on the board? These are candlesticks. This is the key zone, the key area. Once price gets there, it will reject by forming a wick and then a body. Then you will see that red candlestick telling you that I'm about to take off down. Or he hang there green and then the red candlestick will come and overshadow it. So at this point, what do? Entry. Stop loss. So likely price will start tanking. At worst, it break and it fails. But this is where the sweetness is. Your stop loss, your reward is wider than your stop. Your stop loss is from here to here. If price start going back, it stop you out. If price is going, it gives you more profits. So your TP will be next key zone that you have marked. without emotion, without panic, without struggle, without you saying how to your profit just added Bekuro, you will be making some decent stuff from the market. Where's my phone? Do we understand it? So now the other scenario is that, is it charging? So the other scenario, Dominion charges back. The other scenario is that if it breaks, let's watch. If it breaks, it will close above the key zone. It will end with green and break above it. So in this case, you can enter aggressively or conservatively. But sir, this is trading. Just go in. Only that, let your risk management protect you. Go in. Let your risk management protect you. Don't go all in with all your fund, but go in here. Once it break out, your stop loss is here. Your entry is here. Then it goes. Your TP is the next key level. TP. What scenario it reverses? There, if it reverses, that what scenario it reverses. What scenario it reverses? Yes, that close trades. Now, when it reverses, it has done what we now call liquidity sweep. So what you do, change direction. Sell and put your stop loss here. Yes, this one will take you out. Sell. But if you are going to sell, make sure that candlestick that took you out overshadow the previous candlestick. So right now, in this case, it's already saying, I am giving you a bearish engulfing pattern. If market now want to consolidate, how do you know it's going to consolidate? It will stop you out in both ways. First one has stopped you out. Now, second one, you put stop loss here. You started your trade there, then you now go back again. Pause. Because this is already a consolidation. If you go to 1 minute, 5 minutes, you will see it that it has formed a consolidation. It's no more trending. So at this case, you have done 2 losses. Stop. But in an ideal scenario, the first one should have worked. But for first breakout or liquidity fresh setup, it's very sweet. It's very interesting because you are not fighting anybody. You are fighting yourself. Yeah, that's the interesting thing about this thing. You are contending with yourself. You are contending with your status quo, your pride, your ego, your greed, your anxiety. You are contending with your future. You are contending with your financial establishment. You know, nobody is fighting you. You are fighting yourself. And it's a mind game. Sir? Yes, sir. That's the truth. It's a mind game. Trading is a game of probability. It's not a business. I wrote a book where I said treating trading like a business. When you sit down and start trading, it's not a business. But whatever happens, you make out business from the results. The trading itself is probability, not business. This is not business. No business can give you 1,000 ROI on a seat in 3 hours, in 5 hours, in 1 day. It's not a business, it's probability. Time and chance happen to them all. That is trading. Yes. And I know many provincial pastors in Redeem who are trading. In fact, when I didn't know about trading, there's one of our provincial pastors that time, Pastor Luboba. He wanted to even train his area pastors that time. That was what made my area pastor, Pastor Olujobi, to give me 15,000 naira to go and learn trading. Used to be my area pastor. You know him, sir?
Okay.
Okay, so that's how you say this is the, if you can understand what we've just done now. Let's do something else. Let's do NASDAQ. It's the same thing. The same approach. You do your market overview. Go to daily. Come here. Come somewhere here. Okay, right click. Reset. No. I want to get you one day. Early last year, one day. Because I've never gone here in a long time. Let me leave this moving average because I want us to be using it. There's another one, VWAP, but that one, no, maybe now it's once you know how to use the moving average, there's no point using the VWAP. Let's leave it. The VWAP too works like the moving average, only that E gives you VWAP is volume weighted average price. So now this is NASDAQ 100. What trend is this? Overview. This is a bullish trend. However, if you compare this bullish trend to the gold bullish trend, they are not the same. This one is doing the normal wave movement. It's going up, coming down, going up, coming down, but it's going up. You see the wave. So now we are looking at, but this is you have to be very careful now in this situation. We are looking at the market. Okay, this is bullish. I should be looking for a buy. And don't forget our rule. The rule is still buy low, sell high. That is still the rule of the game. Buy low, sell high. So presently, it has even started buying. So you have to wait for a retest. So as you are looking at the market now, maybe you just open the chart. What's it buy? Look at this is daily time frame. From here to here, it has done some decent move. So what you are going to be thinking about is a retest. So you go to a lower time frame, 4 hours. Mm.
This buy, okay, let's say, look at the bearish now.
Mm.
He said it's to buy, but it's dropping.
Mm.
If I should buy at that
Mm.
moment,
Mm.
the money is going down.
It has already bought now.
And
It has sold. You can't even sell here. You can't be thinking of sell here.
let's say,
Okay, you buy and it start dropping. Money start going now. The money will go. Money start going. That's why if you are going to buy, know where you are buying from and then know where you are going to stop from. That's why those key zones are very important, because those key zones are saying your parameter for buying and selling is within this zone. Your parameters for entry and exit is within this area. And you are having a confidence that if it moves from here, worst thing is it goes my way or it break out. And if it break out, it's a change of direction. That's what your key zone is telling you. Your key zone is also giving you an opportunity to say that if it doesn't work, I can go the opposite direction. That's the essence of the key zone. So let's look at it. You know, on daily, I was saying it as bought. But look at it on 4 hours. Some traders will buy here. Why? Because this is already a sell. You buy low, you sell high. It has sold from here to this point. And look at all the cluster, all the moving average are clustered here. And look at the rejection. Look at the week. Price got here, bounced back. He went to sell again. He's selling again. He came here. He's going up again. This is a clear indication that this area is very strong. It's not allowing it to cross. So some 4 hours trader can enter this trade now. Those who are trading from 4 hours. But their stop loss will be wide, because they will have to enter here and put their stop loss somewhere here for a buy. That's too much, because it has overbought already on it if you go to a lower time frame. So let's move to, so now our key zone up here, down here, then down here on 4 hours. Let me mark it out. Okay, let's do it this way. Sir, come and let me show you. I will show everybody one by one how to do the something. Let's come around it. So to mark my key zone, I look for this rectangle. Yes, it's always here. Are people online? And sometimes that thing don't show. So see first key zone here. 1. 2. And if you notice, that's where it came. And then it bounced. Then I can have another one here. These are the immediate zone, immediate area. These ones too, they are there, but leave those ones. This one have happened recently. Somebody else can decide to mark, but you just focus on the one that that happened recently. Recently doesn't even mean that recently. Some of them are on the 19th of January. Let's look at this one. Wednesday, 21st. 20th of January. This one, 23rd. Then today, 29th, it just got there and rejected. So those are our key areas. Do we get it, sir? Do you get it, sir? Look, if you look at it on the board, maybe the light will be more sharp. How we mark the key areas. All those who are looking for that block, looking for fair value gap, is still around the same zone. Everybody is saying the same thing. It's around the same area. For those who will mark on that block now, this is the candle they will be considering. This is where they will be marking. Is it not the same zone? It's the same area. And marking other block doesn't even mean that their trade don't fail. Other block, doesn't it fail? So that's how we mark it. Then you go to the next time frame. You are still looking if you miss something in the higher time frame. If there's something you missed, now I can see something that we missed. Remember, we went to mark this up. Touch it, sir. Let's see where we missed. Yes, then we missed it. Yes, that's it. Yes. And if you observe, can you see now? Look at what happened, sir. Look at what happened. You know, this was the key area we saw. But look here. That place was formerly a support. The moment he broke it down, it went back there and fall. Those key zones are very important. Can you see? It went back to that same area that was this area where price got and went up. When it fell below it, let's say you bought here now, it has failed.
Yeah.
But now look at, it went up, and from there, it rejected and came down. Meaning that this area, we still need to pay attention to it. So for today, on this asset, these are our key zones. Let's see if we can still see something on the lower time frame. It's just those ones, except for this one here. And what this one is saying is that if I'm going to re-enter for a buy, instead of waiting for it to get here, I can pick it here. This area. So right now, no trade on NASDAQ. No jumping into the market. I wait here, I sell. I get here, I buy.
If it gets
here and it fails, it come here, I buy. Because if it comes here, the reason why I can't enter is because the distance between here and here is small. If you are going to look for reward, look for a robust reward. Not a reward that is almost looking the same like your stop loss. Wide. And if I'm going to put stop loss, I'm going to put stop loss in between, below this. Look at the gap from here to here, from here to here.
If somebody decides to buy from and put it.
That's the ideal way. You buy, if you retest, you buy here, TP should be here. That's like, let's see, that's like, look at the long position. So if you have trading view, you open trading view, this long position. You buy, let's say we buy somewhere here, our TP will be here, stop loss will be somewhere here. That's like 4%. Ratio 1:4. So what we are saying is we are waiting for price to come back here for buy. We buy here, we take profit here. And if you are not satisfied with that 4%, you can sell here and then you target here too. Because already on 30 minutes, if you observe, it's already doing what look like a consolidation. Look at. Then it's going back. So it's begin to move in between here. So if I now say, okay, let me go to 15 minutes because right now we can't do anything. Lower time frame is saying don't do anything. Wait for your key zones. You know, those on higher time frame now, we say let us buy. But that's why it's safer on a lower time frame. Lower time frame is already saying overbought. And that's where you are executing from as a day trader. 15 minutes, 5 minutes.
Okay, with the RSI saying
Yes, see.
Now, it's lower time frame. So, one has to
If it gets here, we can sell. We try sell back here. Or you can target halfway. That's like 2 to 3%. Instead of saying I want to be very precise and perfect. Let's say from here now, I target it up to here. 3%. It's okay. Then if you later come back here, I try buy again. Because overview, the trend is actually buy. So if you are trading in the buy direction, is much more stronger than the sell direction, because that overview direction is very important. It's also one of the additional confirmation. That overview direction is bullish. So it's more stronger when it comes down and you buy. That doesn't mean that if it comes here and you sell, it can't work. So the truth, the bottom line is that once you open the market you want to trade, try out the opportunities. Just say I'm trading 3 to 4 times. If I get the first one and get the second one, I think I should be done. If I try the first one and I miss it, I try the second one and I miss it, I try the third one. If I try the first one, I miss it. If I get the second one, let me go the third one. So I get the second one, I get the third one, I'm done. If I get the first 2, let me, whatever happens, opportunity will come again tomorrow. But that one is psychology. Trading psychology. You must be able to control that one. Because greed will always come and other things. That one is now a personal conviction and discipline that you have to work on. Look at what happened here. It crashed heavily here and it's already telling them oversold. Do you know some people will say, but as it's falling like this, let me enter sell. It's my fourth order. And then they start reversing. That's how we lose money. Emotional trading. Then the usage of stop loss is very important. If not, you see what happened yesterday, nobody believed that it can happen. That's why stop loss is very, very important. I was about setting my stop loss when that thing just broke that support. That support here. Let's look at it. Yes, this support here. I wanted to pick the buy from here. The buy from here because of this level here. So when it got here on 5 minutes, I already saw a candlestick. As I picked that buy, I was just trying, and I was controlling so many accounts. My friend just from here to here was like 5,000, was like 4,000 plus. So it affected some of my accounts. Yes. And then it went back. Look at that support that we wanted to pick back, buy from. It went back there and sold again. That's why those key zones are very important. It went back to that same zone. This thing was marked earlier yesterday. Look at it, went back there. This, yes.
You can do it.
Yes. It went back the early hours of today. That same line. And crashed again and even went deeper. Can you see those key area? It's not something people made up. It's just an area where traders and investors have marked out as important area. And that is what is making the market to react. It's not a fluke. It's not a fluke. It's an area where all traders, both market makers, both retail traders, both central banks. It's an area where everybody is waiting for market to take a decision. The same thing as those who use trend line. Though I didn't touch that one, but leave that one. Yeah, you can learn it later on your own. But I don't really use it like that. This is a trend line. The rule of trend line is that you join two points together, and then by the time it gets there the third time, you can trade. It works too. And the reason why it's working is because many traders are using it, and they are always waiting for price to come to that place. So you will always see reaction there. The reaction is that place, orders are there. There are orders. People have placed buy, sell. So market will now go in the direction of those who have the higher money. But when it gets, for example, those key zones, what it means is that orders, people are waiting for order to place their order. Buyers are there, sellers are there, everybody's there. Then price will now move in the direction of those who have the highest liquidity. That is why following trend is important, because market will always go in the bias of the previous prevailing trend. That's just the riddle behind this. Look at gold now, it has stuck in that place. Those who started on 1 hour now, they are like, this thing has been moving before now. Why did it get here? Now it's beginning to stop. So something now, do you know, I just saw something now. That area is a key zone. I'm just seeing it. Can anybody look at it very well?
Yes. Yes. That line. Yes.
Can you see? I didn't see it before. It's because it's stopping. So I'm looking. I'm saying, why is it stopping? As we're standing there now, I'm saying, why is this thing stopping? Why is it stopping? So the next thing is, I look to the left.
What happened when it gets there? Previous.
Yes. Look at it. He got there. He reversed. He also got there and did it a bit. Every key area, you must see that reaction. He got there at the same time. Can somebody draw that line? Pick rectangle and do it. Let's see. This is the rectangle here. Just click, one click on it. Yes, here, take it. Go up. Come here, sir. Bring it here, sir. Can you pause the video? Pause the video before you go. Or pause the video before you go. Because everywhere will be dark to those who are listening. Put it on that something mode. Okay, all right. So, can you see those key zones? I didn't see it before. But now I see that price is not moving. So I said, why is price not moving? Let me look left. As I look left for those key zones. So two things will either happen. Either reject there and go down, or break it and go up. Two things will always happen. So we are making decisions based on either of the movements. However, the idea is that your reward, the space between the two zones that you are marking, where you want to place your trade, the reward must be big enough than your risk. Do we get it now? If my stop loss, if the zone is small, if the zone is small, it's not so good. Your reward will not be much. So make sure that you are looking at a bigger reward. Try to look at the reward versus the risk. So that's how the markets. So how do you move this? Samuel, oh yeah, come and project this something. Okay, you need remote. You need remote. What do you press? All right. So let's mark it. Ah, you mark it too big. Oh. Let's readjust it. So look at it. That's what is making it to react. This zone. So now, what I was explaining is this. This zone too is there that we marked. I don't know where we mark it from, but it's there. Maybe on a higher time frame or so. This one here. Now, if you are going to sell, then think of two things. First, look at where you are selling from, the distance between the two zones. Then calculate, also look at your risk. If the reward is not as fat as this, the reward and then the risk is big, then maybe you should leave that trade. It's not worth taking. Do we get that explanation? Reward should be bigger than the risk. Reward should be bigger than the risk. Let's sit down. Let's take one more. Maybe we use currency pairs so that this thing can sync. And if it's going to sell, I'm not sure it will stop here because of this. Yes, I'll come here.
If you are that probably get
Yes, it's still okay. Yes. Delete this one, Samuel. Can you delete it? This rectangle, just click on it. I'll press delete. Press delete. Aha. So I'm already thinking maybe I will sell it safe, but not on general account. The market is too volatile. I can't risk people's emotion again. But me, I can bear it, whatever happens. So I want the hair. I'm waiting. What am I waiting for? I'm waiting for this candlestick to close. This 15 minutes time frame. I want to see how it's going to close. It's already rejecting, but the candlestick is not strong enough. It's too small. This other green is still saying no. Yes, exactly. It's holding that space. However, if I now see a green candlestick that ride above this line and fully closes, you know, it's riding and then it's not closing. If I now see a very good elephant bar, healthy candlestick, LD, that has a very good body, that closes above this line, then I buy. But if I also see a healthy red candlestick that closes below the line, close out this one, I sell. That's how trading is. It is probability. 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 But if you trade structurally, it favors you. A green candle has started forming. Shadow them, overshadow all this one here, and closes there. I will bias. My bias will become buy. And I am adding the bias that gold is generally bullish. It gives me more confidence to go in. But it's been there for like 2 hours now, Abi? No, for like 1 hour, 30 minutes or so. This is 30 minutes, 30 minutes. 30 minutes. 1 hour, 30 minutes. Let me switch to 5 minutes on this chart. Look at 30 minutes, look at 5 minutes too. It's ranging in that area. Most likely is going to buy. Most likely is going to buy. So let's see how it will close. So let's take one more. Let's go to Euro USD, the most traded assets in Forex. The most traded Euro USD, pounds versus dollar, is the most traded. Euro versus dollar, not pounds. Pounds is GBP. Euro USD. Yeah, this is the most traded asset in Forex. So analysis, you start with your market overview. Let's go to daily. Daily time frame for a long time is being in a range. No trend. You just did this breakout. And now it's pulling back. So let's go to 4 hours. So yesterday, what happened? He bought a bit, but there was a struggle between buying and selling. Go back to daily. Look at what happened yesterday. Day before yesterday, he sold. Yesterday, he bought, but it wasn't so strong. Now today, it has sold. Then let's go to 4 hours. So where are my key zones? This area here. 1. Also, this place, if you go to lower time frame, this place becomes a key zone. This area. Maybe one more we mark here. Let's go to 1 hour. So, as you can see, this area that I mentioned, as price gets there, is rejecting. So what you are supposed to do is that if you are going to trade it, you wait for price to come back to that area. You buy again. But now you're also supposed to mark where your TP should be. So if you notice, the gap is not so much. Go to the next time frame, the lower one. It's ranging. So for me, you are just trading between here and here. If it comes back here, I buy here. If it comes back here, I sell here until there's a major breakout. That's how you are supposed to approach Euro USD now. Do we understand it? So those small time frame too, they are not really useless. Yes, they are not useless. That is why we have to use it for execution. So let's finalize our accounts. Let's open demo. So let's register your account. You have your, do you come with your laptop, sir? Yes, so yeah, let's open demo. I try to sign up. Let's see if it will go faster today. No, this is not where you should go. This one is the link I sent you yesterday. Go and click it, sir. Sir? No, don't hand the light. Let them just be checking the charts there. You see, let me go to gold. Can you see why waiting is very important? See what has happened. That green candlestick that was doing like you want to go up. Go to 5 minutes. Can you see? So as it is now, waiting is the best. Until we see a very good LD candlestick. LD candlestick. Leave the chart on the. Why are you zooming it now? You have scattered what we have here. Press Ctrl Z. Yes, thank you. Press Ctrl Z again. Press Ctrl Z. What happened now? What happened there now? You let me by saying. This one is the general contrast of the TV that you have tampered with. This thing is live. We excellence. We are supposed to maintain excellence. This thing is live. We are not supposed to just be tampering with anything anyhow. Close the entire system and reopen it. Close. Yes. Reopen. Yeah, thank you. It has opened. Okay, so were you able to register yesterday? Yeah, let's try it now. The Wi-Fi is strong. Is your Wi-Fi strong? Is your data strong? Yeah, maybe you should connect to my own. What's the password for that biodata? It's connected, so let's try it. Sir. So now the first thing is go to your Xnest on your, if you are opening the system, just go to xnest.com. Let's open a demo account because from Monday you need to start demo trading. So for those online, if you don't have an account yet, you don't have a broker yet that you are using, let them forward. They will forward a link to the group, to the chat box, so you can click on the link to open your account. Then you register, then we open a demo account. Yes, go to browser, sir. Yeah, register. Can you find a way to share this link on the YouTube page, the one I just sent to you now? I think this is the capacity of the phone that is disturbing the something. You need Wi-Fi. It's turn it off. Oh yeah, okay. Honda. What's the name? No, Wi-Fi. Can I click? Okay, can you click hotspots? This is it here. xnest.com, the website. So this is your password. The name is itel power 70. No, it will be there. It will be somewhere there. Yes, yes. Yes, Nigeria. Yes. If it's not going, use my own. I'm coming, sir. No, you already have an account. Sign in. Yes, yes. Yes, it's the same, sir. Let me see, sir. Yeah, it should be. It's the same, that one that we open. Ah, okay. I think I didn't complete it. Can you see the gold now? Now showing that you want to sell. So that gold is likely to sell back to where it started the journey from. Okay. See, it has increased to 2.75.
Oh.
So we go to demo. Yes. Demo. Click on it, sir. I'm coming, sir. Open accounts. Continue. Okay. Just this one. Or you can save it too, so that updates here. So that whenever you just open it from the system, updates. Let me hang now. Continue. So our bias will now be what? Our bias will be sell. How do we pick the sell? Let's see. We pick the sell here. Entry will be here. Stop loss is here. Take profit is here. That's how many percent? 2.5%. Entry where it is. Stop loss here. Take profit here. 2.5%. Let's see whether it will play out. That's how trading is. Why am I selling? You rejected at that place. A continuation of short-term sell. Price is below all the moving average. Then it gave me a strong bearish candlestick pattern. Are we following now? A strong bearish candlestick pattern. So that's the reason I'm selling. Can it fail? Yes, it may. Have I put real money? Yes, I have put real money. And it's running on profit already. But it may still fail. So we are here, we are watching. That's the trade I pick here. Sir? Yes, enter the password. Enter the password, sir. The password you use. Password has to start from capital letter, maybe. So I don't know how. This one is not going. Yeah, maybe the capacity is. The capacity is. Code. Code. Okay, so the Gmail. Share FC. Okay. Oh yeah, let's go. Which one of the email do you want to use? Connect with my data, sir. Okay, I'm coming. Let's see. Buy your data, you see it here. Click on this one, sir. You see buy your data. Yeah, the password is 081 136 81 2559 911. Yes, sir. Yes. Sir? Demo, yes. Put the email address and the password. Yeah. Scroll down, sir. Yes, scroll down, sir. Back up. Let's choose this first one. Standard. Let's scroll down. Okay. Yes, down. You ask us to continue or something. Continue. Demo. Yes. Scroll down, sir. Yes, sir. Let me see. No, sir. Scroll up, sir. I want to see how much. Aha. Change this to 1,000 or 5,000. Is that 5,000? Yeah. Then scroll down, sir. You put password. Trading password. It can be the same thing with the normal password or different. Put phone number, sir. +234 234 4. With the number. Yes, I create account. So now this is the account information. Account information. So now go to Exness on your phone, sir. Email already existed, already connected to it. Okay, so what you do now is you sign in. No, app. The MT5 app. Okay, download this if you don't have it. Sign in. No, it's saying create. Okay, sign in. Yes, sir. Yeah, maybe you should choose this. Okay, sir, let's just do it. Let's use the phone. If they will just download the terminal here. But I want us to go through this laptop so that yes. Only get few quaternicy by SH can you only get this is very is the phone. any small laptop. Ah? No. Find a broker. Xness. Xness. Xness technology. Okay, so we'll put the login details. Please scroll down, sir. Scroll down, that's one. What can we see? It's 298. Yes, then trial 9. So you change this one to trial 9. You look for trial there. Keep scrolling, sir. Trial now, yes, sir. Then you put the password you set the other time. Put the chat now. Why did you remove the chat? What's your login, sir? Yes, login. Good. Let's attempt the same thing on the laptop. So that we can be trading more professionally. What will I see? You know, using the phone alone makes it look, you know, when you're trading with the laptop, sir, it makes you really build an environment, the ideal, excuse me, sir, the ideal trading environment whereby you sit down, you settle down, you do your analysis correctly, not just quickly using phone. Where am I going to download this thing? No,
What do you want to download?
the Xness trading. Let me just use backside approach. MT5. Put it on the chat, sir. You want to off mic? Okay. Yeah. So now do one thing, sir.